Most of the Bitcoin mining is in places where heat is not valuable, like Texas. I'm from Norway, and here heat is so valuable because it's so cold here. You can build much larger greenhouses in northern Norway, for example, by repurposing the waste heat from Bitcoin mining, because it subsidizes the heating cost. So you can afford to build huge, like massive greenhouses there, which was not possible before. So you can increase the food security in northern Sweden, Iceland, Canada. There's a miner in Canada called Mint Green. They are delivering heat to a city. In 2-3 years, it will be even more innovation from Bitcoin mining and the energy industry joining forces.
I want to start off with this. What is it like to be researching public equities, but like not live in the US? Can anyone invest in the US stock market from anywhere?
At least it's really easy to do it from Norway. And I think from the rest of Europe too. Like I can own it through different banks, like Revolut, for example. They have a zero fee stock trading with American stocks. There are also some Norwegian brokerages who offer American stocks in Norway. But I guess the fees are a bit higher than if you are located in the US. But yeah, it's really accessible here in Norway as well.
So then tell us about Arcane and tell us about your background.
Yeah, so I can tell about my background first and how I got into Arcane and what I do at Arcane. So I've been interested in stocks for a long time, since I was a teenager. And I was doing value investing, I would say. I like to look at the balance sheets and the cash flows of companies and try to find their intrinsic value. And if the intrinsic value is higher than the stock market value, I like this stock. It's not so important for me which sector it is. So when I was a teenager, I really looked up to Warren Buffett. I still like Warren Buffett, although he doesn't like Bitcoin. Um, and but it was like 2017, 2018, 2019, and growth stocks really outperformed value stocks. It was in the beginning of this high inflationary environment when the stock market was like pumped up by all the money printing. And all my friends who just invested in the most risky growth stocks, they were having much better returns than me. And I was a bit angry because it was I that did all the analysis, and here comes people who not really know anything about the stock market, and they are crushing me. Um, and then came like 2017, and some of these friends I talk about, they started to invest in Bitcoin, and I didn't really at that time understand the value proposition of Bitcoin. But I decided to also invest in Bitcoin. So I bought Bitcoin in the summer of 2017, first time at $3,000, and then 1 month later it fell down to $2,000, and I sold everything. and and then, as you know, in December 2017, 6 months later, Bitcoin hit 20,000. So I missed a 10x return there if I had just hold it. And naturally, this made me hate Bitcoin. So at that time, I really hated Bitcoin because I had missed out on these huge returns. So I really understand the psychology behind a lot of people who hate Bitcoin. A lot of them just missed out. They had the opportunity to invest early in Bitcoin, but they didn't, and that's why they hate it. But anyways, as the years went by, I still invested in stocks, and then in 2020, in the spring, when the lockdown started, I sat at home during lockdown, and I could see. And I hadn't really questioned the monetary system before that. I just assumed that everything was okay. But although I understood that stocks were starting to become really overvalued, but then I saw like how much money they were printing, and I started to research the monetary system and how the Fed worked. And
Wait, can I ask you, when you're learning about value investing and then you watch your friends in the growth stocks outperform, and just even that first question where I'm like, how does it work to invest in the American stock market from outside US? How, like, what currency? So while you were learning about value investing and doing all that stuff and your friends were crushing it, how did you think about currency during that time prior to learning about like monetary policy more in depth?
I didn't think about currency at all,
Mm,
because in Norway we have had a really stable currency for a long
okay.
time, and that's the same with the US dollar. I never questioned it until the lockdown started, and I had a lot of free time, and I could see how much money they were printing. And I remember I was sitting in on my couch with my computer, seeing this graph of how the money supply was increasing, and I was like completely shocked. And at that moment, it was like a lightning strike. Bitcoin.
Yeah.
Then I understood the value of Bitcoin. Like I understood, I never understood it before. Then I
Mm-hmm.
understood it, and I decided to spend all my time just researching Bitcoin. And I did. I spent the whole summer of 2020 researching Bitcoin. I put all my money into Bitcoin, and I was studying energy management at that time, and I had to write my master thesis. And I was like, how can I continue to study Bitcoin while I write my master thesis? I don't want to spend my time writing master thesis about something I not think is interesting. So, and I was like, okay, Bitcoin mining consumes a lot of energy. I study energy management. Probably I can write something about Bitcoin mining. And it ended that I wrote my master thesis about Bitcoin mining as a demand response in ERCOT
Mm-hmm.
in Texas. So I studied how the Bitcoin miners there balance the grid, and that was really interesting. And during this process, I cooperated with Arcane Research, and they offered me a job after. So that was how I got into Bitcoin and mining. And so it was like coincidence that it was mining and not some other Bitcoin related things. It's this path dependency, you know. But and after that, I just really continued working on mining research, and
Mm-hmm.
it's also fits perfectly with my background from value investing and stock
Mm-hmm.
analysis, because you have all these mining stocks that were which I think are not enough analyzed, and you see
Mm-hmm.
some huge discrepancies in their evaluations. Even some of the worst operational companies have the highest valuations, and you can find
Right.
some really hidden gems there. So
Right. That's
that's what
perfect. I
motivates
love.
me.
Yeah, no, and your thread on like the valuations and like the public stocks ranked is excellent, and I want to cover that. One more question on the currency part. What is the currency of Norway? And when you would be in value investing, did you think about your gains in dollars or in your local currency?
We have our currency is called the Norwegian krone. And I was always just thinking about returns in the Norwegian krone in my local currency. Um, but the Norwegian krone has actually declined relative to the dollar the latest years, and especially the last year. So
Mm-hmm.
that's one positive thing about hodling Bitcoin from Norway.
Mm-hmm. No, and that's really it. Just life is good, like how you're like being in university studying energy policy, and then find like just having the lightning bolt about Bitcoin. And that's just it. Just is cool how then you like Arcane in a place like it just seems cool to be able to work at a place that you're like passionate about, and it seems like that comes across. So that's cool. I wanted you to define for us like the Bitcoin energy opportunity. I want to define the opportunity and define like the main problem, the main like boogeyman problem that's out there. So start with either of those. Start with the problem if you want, or start with the positive side of just what is the opportunity. Like when you say demand response, or broader than that, like what is the opportunity?
Yeah. So the opportunity for Bitcoin mining to transform the energy system is massive, and it's only really constrained of the Bitcoin price, because the Bitcoin price, it's really what limits how much energy mining can consume in the future. So, but if the Bitcoin price goes to, let's say, 1 million, 2 million, or something like that, then the energy consumption of mining would be big enough that it can have a really transformative effect on the energy sector. Because for the first time, we have one energy consumer that is completely interruptible, can turn on, off, adjust its consumption at a moment's notice. Um, and two, the geographic flexibility of Bitcoin mining. A Bitcoin miner can be anywhere in the world, and it can also scale the operation in a modular way. So if an energy producer needs, let's say they have 20 megawatts of capacity, you can get a Bitcoin mining load which is exactly 20 megawatts. And if you need to reduce that capacity to 18, 17 megawatts, you can reduce the Bitcoin mining load really easily by just adjusting the number of machines. So you never had an energy consumer which is so flexible as a Bitcoin miner. And we see right now there are mainly four ways which Bitcoin mining is providing positive value to the energy industry. The first one is demand response, that Bitcoin miners can help balance the grid, and they get paid. They get paid handsomely for delivering these grid balancing services, which shows which how big of a value it is to the grid. And the second way Bitcoin miners can help the energy industry, it's to serve as a behind the meter load, which gives the energy producer the optionality of selling power to the grid or to the Bitcoin miner. And that's really works for renewable generators like wind or solar, but it can also work for nuclear power plants, which is a base load power, so as a baseload source, so they can't adjust their power production. So coupling Bitcoin mining behind the meter with a nuclear power plant is really smart, because in that way the nuclear power plant can adjust its power production based on the Bitcoin mining. And you also can use Bitcoin mining to mitigate natural gas flaring that's happening. You and one last thing you can do, which is I don't think it's talked enough about. It's repurposing the waste heat from Bitcoin mining, and I think in the reason why this is not so the last point has not become so big yet is because most of the Bitcoin mining is in places where heat is not valuable, like Texas.
Mm-hmm.
But I'm from Norway, and here heat is so valuable because it's so cold here. So if you have a Bitcoin mining operation in northern Norway, uh, you should reuse the heat, and in that way you can create so much value. You can use the power two times. um, and I know that Bitcoin miners in northern Norway, they are having huge plans of repurposing heat, building massive greenhouses, and you can build much larger greenhouses in northern Norway, for example, by repurposing the waste heat from Bitcoin mining, because it subsidizes the heating cost. So you can
Mm-hmm.
afford to build huge, like massive greenhouses there, which was
Mm-hmm.
not possible before. So you can increase the food security in places like that. In northern Norway, northern Sweden, Iceland, Canada. There's a miner in Canada which is called Mint Green. They are delivering heat to a city.
Mm-hmm.
Um, So you can do all sort of things, and I guess there in 2-3 years it will be even more things you can do, like more innovation with from Bitcoin mining and the energy industry are joining forces.
All right. So beautifully said. So what's the problem? Like, why do we keep hearing about this problem and this boogeyman? Like I said, what's so bad then?
It's nothing bad about energy consumption. It's a good thing. Bitcoin mining is only consuming the waste energy, and it's because to mine Bitcoin, you have to get so cheap energy that if you're competing for energy as a Bitcoin miner against households, you will not survive in the long term as a miner, because households have a much higher willingness to pay for energy than a Bitcoin miner. A Bitcoin miner will only survive long term if they have, like, let's say, less than 5 cents per kilowatt hour. But if energy is so cheap, it means that it's not valued in the market where it is. So, and that's per definition waste energy, I would say. For example, in northern Norway, we have energy is so cheap, it's like 1-2 cents per kilowatt hour. But in southern Norway, it's much more expensive. It's like 20 cents or something like that, because southern Norway is connected to the European power market, while northern Norway is not connected even to southern Norway. So we have a lot of stranded energy in northern Norway, stranded hydropower. So that's why all the miners from southern Norway now are moving up to northern Norway. um, so I would say that consuming energy that otherwise would be wasted or sold for almost nothing, it's a good thing. It
Mhm.
gives energy producers higher revenues that incentivizes development of more energy production, and it eliminates waste. And I don't understand how that can be a bad thing, especially if the power consumed is renewable. But eliminating waste of non-renewable energy is also a good thing, in my opinion.
Mhm.
So like, are some people considering Bitcoin mining's energy consumption a problem? It's just that they are afraid of Bitcoin mining because Bitcoin mining is something new. They don't understand why it needs to consume energy, and people have been almost manipulated in the last years to believe that energy consumption is something bad. But it's not. Energy consumption is good. It incentivizes more energy production.
Mhm. What was your what was your thesis about? Like, what is has this tension between energy production being good or being bad, was this talked about in your master's program and in energy management? Like, what was the purpose of your degree? How has this conversation happened prior to Bitcoin? Because this whole, like, is energy production good or bad is not new, is it?
I would say that it's pretty new. It has at least become like um, it has at least intensified the last, like, let's say 5 years. And like in Norway, for example, we the reason why Norway is a good place to live, why it's one of the best places to live, is because of our oil and gas revenues. And I studied energy management, and I know that, like, a few years ago, this degree was 100% focused on oil and gas. Now, when I studied, it was almost no focus on oil and gas. It was only renewables, and I know that the it has become even more focused on that after I stopped going there.
Mm,
So like it's almost like people in Norway, for example, we um, we understand that oil and gas is the source of our wealth, but it's almost like we don't want to talk about it. We're trying to, like, hide it, which I think is interesting.
mm. I want to ask you a question about the stock market leading up to, and then cover your ranking of the public miners. And maybe this is too broad, but I just want to kind of ask it and see what you think. What is the purpose of being a public company? Like, what is the purpose of the stock market?
Yeah, the purpose is to access capital, and being publicly listed, you can access capital much easier than if you're not publicly listed. And Bitcoin mining is a really capital intensive business, so they need access to cheap capital. Like lowering the cost of capital is some of the most important thing you can do as a Bitcoin miner, and therefore you see a lot of Bitcoin miners going public, even smaller miners. And that's yeah, that's really the purpose, lowering
Mm-hmm.
the cost of capital.
Mm-hmm. And so, yeah, so let's get into your rankings, because then I just want to know how you said doing analysis on Bitcoin miners is unique compared to doing analysis on any other company. Is that is that because their income like is in Bitcoin, or is it bigger than that?
The main reason why it's a bit difficult to estimate the value of a Bitcoin mining company is primarily because it's a new industry, and the it's a lot of uncertainty related to the Bitcoin price. So,
Mm-hmm.
like the biggest driver of these stock prices are definitely the Bitcoin price.
Mm-hmm.
And you have also like a lot of other factors. For example, these companies, they differ in their treasury management strategies, so you have to
Mm-hmm.
accommodate how much Bitcoin do they hold. And but I think really analyzing these companies are not that different from analyzing other commodity producers. For example, oil companies or oil
Yeah.
producers. You can and that's also why I think it's so interesting. You can analyze them with models from that you use to analyze other
Mm-hmm.
stocks in other
Mm-hmm.
industries. Like you can use, for example, EV EBITDA, which is a very popular valuation model. You also have some industry specific evaluation model, like EV hash rate,
Mm-hmm.
EV. Yeah, you have a lot of
Right.
these
So
models.
that's fair, and that made me think of a different question about comparing Bitcoin miners to other commodity producers. And so what I'm trying to tee up for myself, like, and for the listeners, just what is the case for like buying a Bitcoin miner, anyways? Like, before we get to the ranking, because I again, I love your ranking, and like I have my own reason of like the one account that I own miners in, and the reason why I do. But what, from your perspective, what is the purpose of buying a commodity producing stock rather than the underlying commodity?
Yeah. So for me, there are two reasons why I buy Bitcoin mining stocks. Um, the first reason is that these stocks have the potential to outperform Bitcoin. Um, so they're like high beta Bitcoin. So it's really just to get more leverage on my existing Bitcoin holdings. Um, at the same time, I think in the long term, only a few of these stocks will outperform Bitcoin. I think most of them will not outperform Bitcoin in the long term, but the best companies will. Um, the second reason is that it can be tax efficient to hold these stocks. At least here in Norway, I think it works the same way in America. You have these IRA-like accounts that you can hold stocks. You don't need tax to pay taxes until you take the money out of the account. So in that way, let's say you have a portfolio with 60%. You have a Bitcoin portfolio. You have
Mm-hmm.
60% Bitcoin, which is like the core component. And this is Bitcoin in cold storage, which you never sell. And then you
Yep.
have the rest in Bitcoin mining stocks.
Mhm.
And you then can use the Bitcoin mining stock component to adjust your Bitcoin exposure according to how bullish you are,
Mhm.
and without paying taxes. Because if Bitcoin, let's say it goes to 200K in the next bull run, then and you start to think that, okay, now you start to understand that, okay, maybe it's will go down soon again. Then you can just sell and buy. You can diversify into other stocks, and in the next bear market, you can buy some more mining stocks.
Mhm.
Uh, I understand that like a lot of people just want to sit invested in Bitcoin all the time, but I think if you pay attention to the market, you can understand at least you can understand a little bit when Bitcoin is priced low and when it's priced high. You can look at the investor sentiment, and you should take profits sometimes. Um, and sometimes it's good also to diversify into other stocks also, or other investments. But you should do
Mhm.
it in the most tax efficient way possible, because if you can avoid paying taxes, why not? It's a risk free
Yeah.
return.
For sure. So it's just funny you bring that up because so Choice app gives people in the US the ability to invest in Bitcoin within their tax efficient accounts. And so this conversation about like holding Bitcoin versus the mining stocks is like lots of people are interested in this. Like it's very like top of mind for people because you're exactly right. Like when enough people don't know that they are able to own Bitcoin directly in the tax efficient accounts, you're right. They go to the like derivatives and are very interested on, how and with yeah, like how can I still own Bitcoin exposure within this account? Or yeah, and the beta on it. That's what a lot of people say with gold miners, also, right? Like gold miners are supposed to rip a little bit faster if you're long gold. So all right, I kind of played it up enough. Like I love your thread on just analyzing them and ranking them. So yeah, tackle it for us. Tell us. I have your second article open too about the EV over EBITDA. So yeah, give us a little bit of the lingo and which one is the best? Which one are we supposed to buy?
Thank you. So I've been looking, because this time is I think is a good time to enter Bitcoin mining stocks.
Mm-hmm.
Um, so as because I'm motivated to enter Bitcoin mining stocks, and I already have put a lot of capital into Bitcoin mining stocks recently.
Mm-hmm.
I need to do analysis, and did two type of analysis. I first analyzed the quality of the companies, their balance sheet strength, and their Bitcoin production cost. And the second was their valuations, because sometimes as a value investor, you can even buy a weak company if it has a very low valuation. Um, but let's take the quality analysis first. The Bitcoin production cost. It's important for one, it's generating high cash flows, and two, the miner with the lowest Bitcoin production cost is the last to turn off its machines. So you have, for example, Stronghold has a very low production cost. You have Argo as well. Riot also has a really low production cost. And then you can look at the total cash flows, because now in the bear market, nothing is as important as having cash flows coming in each month. Core Scientific has extremely big cash flows compared to most of the other companies. Riot also have good cash flows, because Riot has a lot of hash rate plugged in, and that's also why I like Riot, because Riot they're awaiting huge machine deliveries out this year, but they actually have places to plug in these miners.
Mm-hmm.
They have the infrastructure ready, so I don't think Riot has will have any problems. I think they are one of the stronger miners, and we can also look at the balance sheet strength. debt to equity ratio, we see that we have seen that miners with a lot of debt, like Core Scientific, have been the ones who actually needed to sell all their Bitcoin at very low prices. Um and Core Scientific, their debt was machine collateralized debt, uh, and for example, Bitfarms also, they had the Bitcoin collateralized debt, and Bitfarms and Core Scientific were the ones who had to sell the most Bitcoin. So it proved to be a very risky debt. But if we look at the debt to equity ratio, it's CleanSpark and the right blockchain who have the least debt of any miners. So I would say they are the strongest companies from a balance sheet perspective. We can also look at their liquid assets. Their Marathon has the most liquid assets because they have so much cash and Bitcoin on their balance sheet. So, but yeah, overall, the highest quality mining company, I would say, is like in my analysis, I wrote Argo, but I also think Riot is a really strong company, which I really like. And the weakest company from a operational perspective is Marathon, simply because they struggle with getting their hash rate online, and that brings us over to the valuations. And Marathon also has the highest valuations, um, even though they're
Before we pivot to valuation, kind of frame.
strong.
All right. So over there, what were the three things again?
It's the energy prices, like the Bitcoin production cost, and their cash flows,
Yep.
like the pure cash flows, and their debt to equity ratios.
Yeah. So you ranked all of them, and we'll link this whole thread in the show notes. So you ranked all of them on those three grounds, and then next, it's like, so that's the preferred ranking based on those three things. But then now valuation. Tell me if I'm saying this right. Valuation is then you comparing the price of the stock to your like preferred ranking, right? It's kind of like we're playing fantasy football. Like whichever one's available, like can we get it though at the price we want, right?
Yeah,
Am I
yeah,
describing
exactly.
valuation correctly? Okay.
Exactly. For example, I would say Riot is a really high quality company, but if we look at it from a valuation perspective, they they don't have the lowest valuation, but that's okay because they're such a high quality company, so they should be priced at a premium compared to some of the other companies which are weaker. Still, their valuation is not like really high, but it's a bit higher in the high spectrum. But if we look at the EV/EBITDA, which is
And what does that mean?
it's enterprise value divided by the earnings before interest, tax, depreciation, and amortization, and it's really a measurement of how much cash the company is generating relative to the total valuation of the company. So, and this valuation metric works in all industries, and normally, as if it's lower than 10, it means that the company is undervalued. And we have very low valuations in the mining industry right now. Like, for example, CleanSpark's EV/EBITDA is like 2.9. And it will be really, really hard to find in any industry in the world companies with such low valuation. And that's based on the current Bitcoin price, which is really low. So if the Bitcoin price increases, their EV/EBITDA will be even lower. They will be even more undervalued. So if we so just from this ratio, it can increase their valuation is really low. So even if nothing happens to the Bitcoin price, I still think some of these stocks will increase over the next year or two. But if the Bitcoin price increases, they can increase a lot. Um, the only company which have an EV/EBITDA higher than 10 is Marathon of the 8 companies I analyzed. Stronghold, CleanSpark, Hut8, Bitfarms, Argo, Riot, Core Scientific, they all have less than 10 in EV/EBITDA. We can also look at their assets to value them. And the best asset valuation metric in the mining industry is the enterprise value, like EV, which is the total value of the company. And we divide it by the ASIC value, the value of their ASICs. And we can find the value of their ASICs through hash rate index, because they track the market value of ASICs. So for example, CleanSpark, they're also really undervalued based on that metric. They have 1.9, which means that if you buy ASICs through CleanSpark stock, you pay 1.9 times what if you bought ASICs in the ASIC market. And that's not a lot. And we have to also consider that CleanSpark are awaiting deliveries of more ASICs. So if we look at the enterprise value divided by the contracted ASIC value, the ASICs that will be delivered this year, it's only 0.6. So you actually get a discount on the ASICs by buying it through CleanSpark. So they're almost valued less than their assets are valued in the market, which is pretty crazy.
That is crazy. That's wild. That's like what's happening to like GBTC right now, of like you're buying Bitcoin at a discount. That's interesting. And you're doing the same ratio, but to the ASICs that the companies hold. I'm gonna think a lot about that. I want to use that to almost then take it full circle and just end on this concept of like growth versus value. Like back to when you like thinking about Warren Buffett and just thinking about value investing, and I asked you about the purpose of the stock market. Yes, from the point of the company, like the purpose of a company going public is to have more capital to do more of what they do. This is again kind of broad, but like what is the purpose of an individual kind of like looking at this like value versus growth decision? Define value versus growth also.
Yeah, so value stocks are stocks which are not really growing, maybe growing like 2-3% a year, and they have it's businesses that have reached their maturity, and they're delivering cash, paying dividends to the shareholders. And growth stocks, it's stocks that are companies that are growing fast, and these stocks are usually not running at these companies are usually not running at a profit. They're often running with negative margins, with losses, but the expectations are that they will deliver profits in the future. And during the last, let's say, 10 years, I think growth stocks has crushed value stocks. Growth stocks are also more risky usually than value stocks. You could also say that stocks that just have a really low value in the stock market, really low valuation, these stocks are also value stocks. In the beginning of Warren Buffett's career, he was not interested in the quality of the companies. He was only buying if a stock was undervalued, he would buy it no matter if the company was high quality or not, and that gave really good results. But as he got older, he started to only buy really high quality companies and just hold them.
Yeah. So that the analogy that popped in my head for that, it's almost like counting cards. Like when you're looking for the value, like you're just looking for the best opportunity to like enter, and because companies the purpose of a company is to like make money. The purpose of the company is to make money, and so you want to find like I've always just thought about this. So then you're trying to invest in companies that then if their ability to make you money should be tied to their share price. Like you as a responsible investor are investing in a company that's making more money, has the ability to make more money. You should be rewarded with a like higher share price. But to be honest, I think a lot of people are in this bucket. It feels very random. It feels completely random. So like what you started off with about just like you're doing all this research of like trying to like think critically about this, and other people are just picking the trendy growth stock and it's just like working. That's is that because like of the monetary like debasement, or like what, why is that, like why, the same way that you were like, oh, when you sell Bitcoin then you can understand how people have a negative taste towards it, like I can understand why people have a negative taste towards the stock market, like just in general too, like it just feels very, it can feel very random. I don't know, any thoughts on that?
Yeah, like the value stocks have tended to perform well in inflationary environment, while growth stocks has performed worse. So we see now like a rebound of value stocks as
Mm-hmm.
inflation has increased, especially energy stocks. Um, but yeah, I can say that like most people probably shouldn't invest in stocks, I think, um, or at least they should own only like really high quality companies that have
Or
existed for a long time.
I was about to bring up index funds because I realized that's the one thing we haven't touched on either, like kind of passive versus active investing. Like when I say random, also like index funds feel very like a self fulfilling prophecy. Like they're just growing because of their inflows. Like there's so much just
Yeah,
passive inflows turned on because of structural decisions of just the way our society works. Like it's like these index funds are just growing based on structural inflows.
yeah. Actually I'm a bit negative towards index funds as well,
Mm-hmm.
because I believe that if you give someone if you like outsource your wealth decisions,
Mm-hmm.
um, you are in the risk of getting scammed. I know that you can be scammed by picking your own investments. You
Mm-hmm.
are in the risk too, but at least you will learn something in the process by only like closing your eyes and putting them in your money in an index fund. I think in the long term, you will not perform that well. Like historically, yes, you have performed really well by doing that, but times are changing, and if an if the market gets if valuations get completely distorted, due, for example, due to index fund and passive
Mm-hmm.
investing, you don't want to, you want to exploit opportunities then.
Mm-hmm.
um, because I really think there will be a lot of opportunities just because people not care.
Mm-hmm.
um, so yeah, but I still think that for most people, if they're not interested in investments, it's better for them to put their money in an index fund, but then they can't complain if they don't get good returns.
Mm-hmm. Mm-hmm. What while I have you, I also want to ask you a question just about dividends. It has always bothered me that like dividend stocks, like the company is not required to pay out dividends, right? They're not required to pay out dividends. So it's like when people talk about their dividend portfolio, you're basically just going off of the history of them doing it, right? And how quality of a company they are is based off
Yeah,
of how many times they haven't missed it, and like certain ratios of
yeah.
how much they pay out based to their earnings, right? How do you as an analyst think about dividends if you do?
I don't care about dividends at all. Like I think if a company has money that it has excess capital inside the company, and it
Mm-hmm.
can't get better returns on this capital by investing it in new business activities
Mm-hmm.
inside the
Mm-hmm.
company, then it's better to pay the company to pay dividends to investors. But
Mm-hmm.
paying dividends just to pay dividends, which a lot of companies do, which has a history
Mm-hmm.
of paying dividends, like they need to pay dividends just to please investors. and if they miss dividends, the stock will decrease. I think
Mm-hmm.
that's a bad way to allocate capital.
Mm-hmm.
It's almost like for Bitcoin miners that just say they going to hodl all their Bitcoin no matter what. It's not a good capital allocation decision. You should have a you should not promise investors to hodl Bitcoin or hodl all your capital in Bitcoin or to pay dividends no matter what. You need to be flexible and at
Mm-hmm.
any time choose what is the best to do with your capital. So I don't really care about dividends, to be honest.
For sure. No, and that's what it makes me. So I kind of shared my cynical side on like stock market, but then when I try to draw myself back, I'm like, the at the end of the day, like entrepreneurs and founders, the same way we talked about like energy production is good. Like pulling an idea into reality is good. Like using money to pull an idea into reality is positive. Like that is super positive. And you're right. And that's why, like, if I have excess funds as an investor and I don't have any good ideas at the time in order to use this money to pull an idea into the world, I should give it to a founder who has an idea and has the ability to operate it and execute it and pull it into the world. Like, and that's what business is. Like, and I've been enjoying just reminding myself of that like lately, and I think others have too. Just like getting back to basics of that's what it feels like when I'm in no way like a researcher or analyst at the level that like you are, but it feels cool to like you're analyzing the decisions of these boards, like of like what are you doing with the funds that you've been blessed with? Like how are you impacting the energy grid? How are you like doing it? That yeah, that feels good. Any like what philosophical thoughts like down that trail?
Um, yeah, I could like I agree with everything you say about that. Um, like this CEOs of companies, this management, they're really capital allocators. Like that's what their job really is. If they can't get better returns on the capital inside the company, if they don't find anything to invest in, they should
Mm-hmm.
distribute the money in dividends. If they
Mm-hmm.
can, yeah, that's good. That's why I'm investing in this company. Um, but I can talk a little bit about the decisions of the Bitcoin mining companies to just
Mm-hmm.
hodl Bitcoin.
Mm-hmm.
I think some of these companies actually understood that it was not that it could be a risky decision. I can't imagine that their finance department was not even modeling this. Um, Maybe they didn't understand that the Bitcoin price would fall to 20K. Like that's a really was a really low probability in
Mm-hmm.
2021. But I think the reason why they hodled their Bitcoin was because the market wanted it. The stock market wanted it, and
Mm-hmm.
because investors didn't understand that this can be a risky decision. So investors would invest more money into Bitcoin miners who said they were going to hold all their Bitcoin. So they were able to access more equity, and they
Yep.
could also raise debt that was collateralized with their Bitcoin holdings. So both the access to debt and equity was better for companies who decided to hold all their Bitcoin, which
Mm-hmm.
gave them access to more capital, and they could expand much quicker, and they could use this capital to buy enormous amount of mining rigs,
Mm-hmm.
and these future deliveries of mining rigs was again propping up their
Mm-hmm.
stock valuations.
Mm-hmm.
Um, so yeah, I think it was working in the short term, and this decision, but in the long term, it proved to be a big risk.
Mm-hmm.
And I think in the future, these Bitcoin mining companies, they will have a much more sophisticated risk management strategy, which will look holistically at both their balance sheet, the treasury management, but also at their energy. They will have derivatives traders, energy traders, and Bitcoin traders who work together in a team to uh, to have a holistic view on the risk management of the company. And I think this was the last, hopefully the last bull market with this retail treasury management strategies and risk management strategies. um, so we have seen an institutional grade Bitcoin mining bull market, but they had the retail risk management strategies. So you had all these huge companies who still hadn't really learned how to do risk management. And I understand that it's hard to know exactly how you're going to do it in such a new industry. um, so you had this 3 Arrows Capital situation, just on less steroids, basically.
No, well said. I think that's a great place to leave it. Tell people how they can get in touch and where they can download your reports.
You can find me on Twitter. My Twitter handle is jmellerud, JMELLERUD. Beware of fake profiles. It's a lot of them. And you can find my research at arcane.no/research.
Perfect. Hey, thanks so much for the time today. Loved it.
Hey all, this is Brian. You can reach me on Twitter at Brain Harrington. Shoot me a DM with any feedback from today's episode. This has been a Choice App production. Bitcoin is becoming centric to personal finance, and we want to help you learn how to better engage with Bitcoin financial services. None of this is financial advice and is for education and entertainment only.